Welcome back. Now it's time for our weekly market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing North American equity markets higher across the board in the United States as well as Canada, and that does follow some downward pressure on Thursday. In fact, we saw the S&P 500 down by about 2%. What we're witnessing today, though, in those U.S. markets, we'll start there, outperformance in technology, semiconductor, software, apparel, retail, as well as energy. All of those sectors are moving higher. Underperformance, though, however, is in the regional banks as well as biotech. In terms of other areas that we want to keep our eyes on, we continue to see some strength in gold. Recall that we have seen some new highs in the price of gold. It currently is trending upward to the tune of about 0.7% today. Bond yields are moving higher as well. There's concern that we will continue to see hotter than expected inflation. We'll get to that in just a second. Bitcoin is down by about 1.1%, and WTI, or the price of oil, is flat on the day, but was up 1.5% yesterday, currently trading at around $87. So if you haven't been watching it, keep your eyes on it. There's been a big move forward in the price of oil, and that is leading to investors and strategists to have to incorporate what does a higher price of oil mean for the economy, for inflation, for earnings, and I think that's something to really keep your eyes on. Away from that, in terms of the market narrative, there are concerns right now amongst investors that the U.S. Federal Reserve will delay the rate cuts. Keep in mind that the expectations is that they will cut rates starting in June, but we have had much stronger than expected economic results in the United States, starting with the jobs picture today. Hugely surpassing expectations. 303,000 jobs were created versus 205,000. That was the consensus. So a big, huge upside to the expectations. Unemployment in the United States stands at 3.8%. So a very strong jobs picture, and also very strong ISM data that we received this week as well. So U.S. economy looks to be very strong right now. I would also point out, though, that the question mark in terms of when the U.S. Federal Reserve will start to cut rates is eating into some of the market performance. The S&P 500 right now is on track for its worst weekly performance since October. So there is a bit of a push and pull in terms of concerns whether or not the Fed will cut rates when they need to. But then on the other hand, the economy is strong, so maybe they don't need to. So big debate still going on there. The market, as I said, does expect the Fed will cut in June. So we'll watch that. We'll also be watching very closely next week. We'll get another read on the CPI data. So that'll give us an indication in terms of if inflation is too hot. We'll also get the kickoff to the U.S. earnings season, with banks beginning their reporting season on Friday. So a lot to come next week. In terms of some stocks to watch, Krispy Kreme, the ticker there is DNUT. That stock is up just over 6%. It was upgraded over at Piper Sandler. And then Snowflake in the tech space, that stock's up by about 1%. That also got an upgrade, but over at Rosenblatt. So a couple stocks to watch. Away from that, we're keeping our eyes, of course, on the TSX. It's up by 0.7%, as I mentioned. Most sectors are higher. That follows a lower close on Thursday. But the TSX is, in fact, on track for weekly gains. Jobs numbers here also very much in focus, coming in worse than expected. We lost 2.2 thousand jobs to 2,200 jobs versus an expectation of a gain of 25,000 jobs. So big miss on the Canadian jobs front. And in fact, the unemployment rate jumped to 6.1%. So we are, in fact, seeing a diverging of economies in Canada as well as the United States. The U.S. economy looks to be marching forward with some nice strength. Here in Canada, less so. You can see that with the jobs picture for sure. We're going to be watching very closely next week. The BOC, Bank of Canada, will be in focus. The expectation is that they will, in fact, hold on rates. No rate cut and no rate rise. So we'll keep our eyes on that. But importantly as well, what are they saying? What are they seeing? On that front, we are hearing from various participants in the market. According to CIBC CEO, he does not believe that we will see rate cuts this year. So that's something to keep in mind. That's according to Bloomberg. CMHC said that they expect home prices to hit record highs in 2026 because of significant demand. And RBC is talking about the Vancouver housing market, saying it's in a full-blown crisis because of the affordability issue. So a lot of push and pull in the Canadian market, specifically higher inflation. When will we get cuts? Do we need the cuts? And a little bit of a weaker economy. And of course, that affordability issue and the inflation that we're seeing continues continues to really, really weigh on consumers and Canadian citizens. I'll leave it there. Back to you.